Greetings traders, this is Houston Trong from thetradingedge.org, and here is the market watch for July 26th to 30th, 2021. Hope you're doing well out there. Hope you survived the last couple weeks. I'm back from vacation. Took about a week off and missed last week's video because I came back a bit late to record last week's video, but had a nice some nice time off. If you ever come to Quebec and want to check out a nice area to frequent, check out northern Quebec, Charlevoix, which is kind of northeast of Quebec City. Very nice and relaxing part of the province. Anyways, let's get into the markets here. And as I mentioned in the opening, I hope you survived the little pullback we had the last week or so. Of course, the markets have since rallied since the bit of a drop that we had on Monday. And it's gone straight up since. So SPY Qs once again back to all-time highs, and it's kind of the same environment that we've been talking about for the last little while now. And the environment continues to be one where you always have to be careful when you're going into highs. I've been kind of calling out these as yellow alerts and making sure that you're aware that you're going into highs, and that it's very common to see these breaks to the downside when you're going into highs. And the market has not been rewarding the chasing aspect of trading. So if you're a breakout trader and you keep trying to buy these highs, I bet you even stop that a lot, right? And at the same time, we've not had any kind of downside continuation. Any kind of downside has been quickly gobbled up by the markets, by buyers, and it continues to be a scenario where you're better off buying at lows and selling at highs than doing the opposite. That is to try to short lows or buy highs. If you've done that, you're probably not doing very well for the year. So that's the market that we're in. We continue to be in, and I believe we continue to play this game for a while. So that out of the way, that's the context for the markets we're trading in now, and nothing's changed there. I'll definitely highlight what to look for in the charts this coming week. But for this week's price action, there's potential a lot on the calendar, both on the earnings front and the macro news front, so it's definitely worth paying attention to. We are in the final trading week of the month, so that's also another another bit of data to have to parse through, because oftentimes the final week of the month can actually be a little bit we can see some volatility as people square out their positions going into the end of the month, so you have to watch out for that. This week, I would definitely be watching a few things. So, new home sales on Monday will be a good one to watch. Then we have FOMC on Tuesday. So, FOMC, the meeting in the morning that begins. Then on Wednesday, they of course have their announcement followed by the press conference. So, Wednesday should be market moving, and not to mention the GDP number and jobless claims number on Thursday should be also quite important. That jobs claims number continues to be the one to watch. Once again, I've been saying this for for over a year now, but you basically just want to do the opposite. Not the opposite, but you just want to have in mind that the regime that we're still in is one where good news for the economy is not necessarily good news for the market. So you continue on to see bad news for the economy, and because that will typically be good news for the stock market. Once again, this past week, jobless claims number came in very, very high. 414,000 were the U.S. jobless claims, which was well above the economic expectations, or the expectations of the economists. So, what did the market do? It rallied. So that's exactly would be the opposite of what you think should make sense, but that's not the point. The point is you want to see lots of jobless claims, because eventually the market's hoping that down the line the Fed's going to have to either continue their loose monetary policy, or maybe we even see some fiscal spending on the government side. So that's the macro calendar, and of course on the earnings front we got a lot of stuff going on. So Tesla on Monday, basically all the FANGs are reporting this coming week, so there should be a lot of market moving stuff Monday, Tuesday, Wednesday, and Thursday. Potentially a lot of headlines there. I'm definitely going to talk about Bitcoin and the crypto market as well this video. So without any further ado, let's just jump right into the charts, because there's lots of stuff to cover and we've already set it up enough. So let's hide some of these charts here now, or some of these stuff on the right hand side to give us some space, and let's jump into the chart. And let us begin, as we always do, with our friend the VXX. So what's the VIX telling us, and what can we glean here? Well, essentially, it's still playing out its outside bar. So we had a Momo down going into July, and now we have an outside bar to basically, it's going to be an outside bar for the month of July. So outside bar. What do we see this week? Well, here, look at this perfect move to the upside here. Last week we had basically, so here, shooting star, right? Shooting star followed by a hammer. We had a continuation on the hammer. This is a momentum hammer. We expected a move to the upside. We got that move, right? So the markets basically rallied on Monday, or the VIX rallied on Monday. And look what it tagged. Basically tagged the average monthly range to nearly to the T, and has faded back in now. And now you expect, this is now shooting star, expect this to resolve to the downside. If this thing breaks below this low here, we're going to probably come out and at least take out July's lows. All right, so very clear stuff on the VXX. Basically perfect pop to the upside, tags the average monthly range, and falls back in. As you know, with the VIX, on average, it's actually better to be a seller of the VXX or the VIX versus a buyer, unless you see some sort of volatility change. And that's why you have these bands. When these bands, they break, and you actually break above them, that's when you see an expansion of volatility. Until then, you're more often than not, on the average, better off just selling these spikes. As we've seen now for multiple months, man, it's, we can go back in time. You can just go back and look at the time series. Anytime the VIX pops up, you're usually better off being a seller of it, right? On an average. And so when do you know when to cover? When do you know when you're wrong? You're wrong when they break out of the average monthly ranges. If it breaks out of that condition, you don't want to be a holder of that anymore. That's when you want to get out and look for the next shorting opportunity. But once they clear the average monthly ranges, then you see a change in volatility regime. But until that happens, you just keep selling those pops, because ultimately the VIX is going down, VXX specifically. And that means SPY has been going up, right? So now on the daily chart, what's it look like? We get the spike up on Monday. Okay, so on last Friday, we closed the week as an outside bar. Sets up perfectly for the Monday morning panic. And what they do, look, it hits the top end there. That's the average weekly range. Okay, so it's even though you're seeing it was a big pop up on Monday, up 14%. That being said, that's still within the normal bands of distribution. So that's still within the normal average range of how the VIX trades. So it actually exceeds it slightly, but then sellers quickly come in and we go Momo up, fade it, all right? And now come back to the range, expect that low to get taken out there at some point. Maybe not right away, because I think on the equity side we're now a little bit extended, but it could go higher. So this, the indices could go a little bit higher, which could cause the VIX to break to all-time back to these lows again before maybe we see a little spike up again. But let's take a look at the SPY now. So let's jump to our friend the SPY. Went back to all-time highs, and SPY, what do we got here? Well, we have back here we have, let's count them now. I think it's 9. 1, 2, 3, 4, 5, 6, 7, 8. Yes, 9 months of consecutive higher highs. So do you see that pullback anywhere that we had this past week on July's big green bar? No, you don't. It's basically been wiped out, right? And that's the thing I've been saying for a while, is that it's very difficult to reverse the SPY here until you can take out the prior month's lows. Because until you can actually take out a prior month's lows, you're going to see buyers just naturally step up. And we're just in a runaway market. I've been calling that now for the past few months. We're in a runaway market, and there's no reason to believe that it's going to change anytime soon. I want to change my mind when we take out a prior month's low, and I'll really change my mind if we can take out the prior quarter's low. Until that happens, I just keep thinking we're going to grind higher here. Not even grind higher. Maybe we can even rocket higher if things keep going the way they're going. So right now we got a 9 consecutive up months in a row. On the weekly chart, we got a big outside bar now. So get the outside bar. Let's reset here. And basically what we saw is that we had a gap down on Monday, and as soon as they push it back up into the range again, and they test the prior week's low, there's a possibility it comes out the other side, and that's what it did. It comes out the other side, and look what it tags on the upper end, the average monthly range. So even though this bar looks sort of wide, it's actually within the reasonable move of an average monthly range. Now, if we break above the average monthly range, then we can really see some range expansion. But for now, this is just a typical move that you typically see the SPY do in its average monthly cycle. So there's your outside bar now. Question is, what do you get next week? Does it go outside bar up? That's called the Momo up. Outside bar down, Momo down, or some sort of inside bar. And I'm betting, just based upon the amount of earnings that are on the calendar and the macro news that is going to come out, we're probably going to break this outside bar. Maybe we break to the upside, and that's what you want to watch for. Is if you break to the upside but fall back into the range again, that is not positive news. You want to watch out for that, because that's basically someone, they're fading these breakout guys, because we're at all-time highs now, right? So if on Monday we pop up, that's these breakout traders getting in probably late, as they always do. And if all of a sudden we see sellers step in and you create some sort of long wick here, then and come back in the range, then those buyers, breakout buyers, are going to get stopped out. Once again, never a great thing to chase here in these markets, as I mentioned right from the get-go. On the daily chart, I'm going to throw a bit of a, it's just not, I wouldn't even call it a yellow flag, because I don't think it's going to set up a big reversal, but just something you got to watch out for, and goes back to what I just said a few moments ago, that you don't want to be a chaser. Because what happens if you chase here? Let's say I decide to buy the break of this bar on Monday morning. What is that? You're going right into Bollinger Band highs, right? And we don't like doing that. We don't like going to Bollinger Band highs, because we know at that point it doesn't take much for you to get stopped out on any kind of quick pullback. Because when you buy a break into the Bollinger Band highs, what do you need to see happen? It just has to keep going, right? Literally, like, you have no room for error in that trade, and that means you are at what I call the tip of the spear. And when you're at the tip of the spear, there's a good chance that you're gonna fall on that hill. So that's the thing you need to watch out for when you're going right into highs. So I prefer to see how that kind of have that pullback like we saw back here, right, on SPY, and then be a buyer at these lower levels. Because look what happened on the SPY this past week. Look at that 50 period moving average. You tagged it exactly to the T, and buyers stepped up. And that 50 period has been holding now for months. So look at that tag. 50 period there, and that has just been a level that buyers have been very comfortable buying. And I can go back here, and the last time we broke below the 50 and stayed a couple days below it was here back on, I think it's November of 2020. Yeah, November of 2020. Sorry, this is October of 2020. So it's been a long time. And if that's not clear for you, and the SPY is a bit jagged because of the number of gaps, but if you want to see a really clear chart of how strong that 50 period has held, look at the ES, right? The ES has very few gaps. Look at that. Look at the tags of the 50 period, and look at how it's been gobbled up each time. Now here, back in October, it did break below a few days, but look what happened down here. You break below the lower Bollinger Band, the bar step up right there, right? When you break below, step up right there, and it's been gone ever since. And it's never stayed below now that 50 period since that small portion of time here and there. So pretty much all of 2021, yeah, that 50-day has been solid, right? So at this point, though, like I said with the SPY chart, you're going right in all-time highs at the Bollinger Bands. So I'm not going to give it a yellow flag, but I'm just warning that it's not a great trade location if you decide to pick up some SPY now. All right. Let's talk about the Qs. Qs all-time highs once again. Congrats, Q holders. And I think a lot of traders, unfortunately, are underperforming the indices here at this point, right? So the SPY and the Qs, they've had a massive, massive is probably too strong of a word, but they've had a really decent year, right? So Qs are up 17%. SPY is what? Up 17% on the year. So both pretty good, both pretty good looking charts. But unfortunately, I think some traders are probably not outperforming the SPYs or the Qs because they're not. It's very difficult. No one typically, unless you're a longer term investor or you're into passive indexing, do you just hold to your SPYs and your Qs. A lot of people will try to chase individual names, but as you've seen, a lot of individual names have been a lot bumpier, or the ride has been a lot bumpier than simply holding the indices. But as a trader, your job is to try to outperform the index. So if you cannot outperform the index, then you have to maybe consider thinking of just holding the index. So that's something that each trader has to think about is, listen, if my performance cannot exceed what the current indices are doing, then maybe my strategy or whatever I'm doing isn't sufficient. I should just be investing and dollar cost averaging into buying indices. Just something to consider there. You know, it would just make your job a lot easier, right, than trying to find beta by chasing these individual stock names, which have been harder to do. At the same time, not to murky the waters too much, but a lot of people tend to also try to hedge by, let's say, buying puts on the indices. And you know, we've seen individual stocks collapse, right? Certain sectors collapse, but the overall indices themselves, specifically the Qs and the SPYs, have not gone down whatsoever. So if you're holding a basket of stocks and you're trying to hedge by going, you know, by buying puts on the Qs or the SPY, that strategy probably hasn't worked, and you've probably, you know, not only faced a pullback in those individual names, you probably also lost on your hedges. So not a great position to be in there, which is why I'm mentioning that. Well, you know, once again, you know, the Fed, you know, as much as you may love them or hate them, they measure their performance more than likely on the overall indices, right? Not on individual stock names. I don't think they care so much about the individual stock names or companies, so long, of course, as those, you know, companies don't have some sort of systemic risk or are too big to fail. But, you know, I think they measure the health of the stock market on the indices and not individual names. So maybe you're better off, you know, going just long indices, even though you may not get the same return. But again, something to consider. So let's go back to Qs here. I went on a little bit of a rant there, but here's the Qs. Qs outside bar, exact same thing as the SPY, and just what you wanted to watch out for. As soon as it comes, so you gap down, and as soon as you come back into last week's range, you have the possibility it's going to come out the other side, and that's what happened. And we got the outside bar now. Question now, this is going to throw up the yellow flag for the Qs. This is a bit tricky for the Qs now, because now you got the FANGs reporting this week, but you're going right in the highs. So what's going to happen here? I think we're going to see some profit taking. So maybe you pop up a bit, but this is just like the SPY. You have to watch out that when you pop up, they don't fade it. If it pops up to here, it comes back in, that's a shorting opportunity. Personally, I actually will try to take that short and actually fade some of those Qs, or maybe even some of those FANG names, if they pop up and break above there and come back in again, because that will be a chance to fade some late longs. Okay, so I'm throwing out that yellow flag on the Qs. I don't think it's going to be a massive correction, because in order to see a really big correction, I have to see June's lows taken out. And given that we're already up here and we only have 1 week of trading left, I just don't think we're going to come out all the way back through the other side again. So I'm not looking for a major correction. I'm just looking for potentially some folks to get off sides and then stop out those folks. Because right now, look, 5 consecutive green bars in a row. Really nice move here on Monday. Look at that hammer that was set up on Monday off of what? That quarterly monthly open. Doesn't get any cleaner than that, right, folks? This is why we have that level. People are like, what is that level? Why are they buying that? It's literally the quarterly monthly open. I can't make this stuff up. There's people just basically setting up there and defending it. So there it is, and now your all-time highs. But guess what? You go higher here. It could go higher. I'm not saying you cannot, but the onus is on the buyers to keep pushing markets higher. Otherwise, yeah, you're gonna see some stragglers, and they're gonna get stopped out. And hoping to be in that trade when that time comes. So Qs in all-time highs. Congrats, Q holders. I would not be surprised to see a bit of a pullback now, just to stop out some late longs. Dow marching steadily upwards. Not all-time highs yet, but getting close. So Dow here now. We had a Momo hammer last month, and that broke above it. So that's a bar up now. So green month on the month. And we got the outside bar as well. So really big range here for Dow. Just fix this chart a bit. There we go. So that's a pretty big range, although still within the realm of what's usually possible for the average month. And now we have the outside bar. So which way do we break? That's what we want to see this coming week. Although you can see here the Bollinger Bands are slowly tightening here. So it looks like we're getting a bit of compression. So we could have a bit of consolidation here. And maybe we see it pop up and think things fade back in again. We see a bit of a consolidation. Let's see what happens there. So that's what I'm looking for on the Dow. Which way does that outside bar break on the weekly chart? Russell's the weakest of the bunch. So Russell, people got out of those small cap names earlier, like the last few weeks, but they actually got back in this week. So I think the Russell's actually looking a little bit better, even though it's not at highs. I think it's trying to play catch up here. On the monthly chart right now, we did break below last month's lows, and we went for a little ride there, right? So we did break below last month's lows, and what it did was it took out the prior month's lows and the month prior. So that is May's lows, and we took that out. We popped back in again, and if we can break back into June's lows this week, that's going to turn into something like a hammer, right? So that's what I'm looking for as a possibility, is maybe we break up here, to close out the month of July. Maybe it looks more like a hammer, or at least a long tail. That's what I'm watching for at this point, because this is actually very productive price action. Here now, we gap down. We actually do a gap reversal. This is actually very significant for the Qs. The buyers finally stepped up, and they did so in a meaningful zone. So here you gap down. You're below the weekly Bollinger Bands. That's significant. So at this point here, they step up, and as soon as you come back into there, there's potential for coming at the other side. Now we ran out of time here, and we are right there at the average monthly range. So we are trading right below it now. But if we can break above here this coming week and crack up in there again, right? As I said, that would turn into some sort of long shadow or long wick, maybe hammer-like bar on the monthly chart. But for now, that's pretty significant. We do see the big gap reversal, and that's the gap reversal we saw here on Monday. Okay, so here, right, it gaps down, it comes all the way back up again, and I think it tags the low here, 214.47. No, not quite. So it was 214.45 on the Monday, but they did close that gap on Tuesday, and that continued the rally here. On a Friday, a bit of profit taking, or a bit of selling, but look, they pop back in the range again, and I think it's still in a good spot there for Russell, so long as we don't take out this past week lows. So if the current week's or last week's lows, or this week's lows can stay in effect, I think the Russell can begin to rebuild here. Maybe we see some higher highs. So that being said, let's talk about two more indices before we talk about some of the other assets outside of stocks, and that is the TSX. The TSX, before I went on vacation, actually for a few weeks now, I've been calling yellow flag on the TSX. Why is that? Because we're going right into Bollinger Band highs. What do we know about those? We know that if you take out last month's lows, you're going to see a quick flush, because anyone who's getting in late there, they're going to get stopped out. That's what we saw now. But look, equities, the TSX equity side has repaired itself, and now we're looking like a strong hammer. So that is actually pretty productive in terms of the buyers, and this maybe shows you that the commodity prices may have actually bottomed out here, and maybe oil has bottomed out. We see some stronger commodity prices, given that TSX is such a strong proxy for commodities. So this past week, we actually saw a gap reversal, or a gap reversal on the TSX. We gapped down on the Monday, and look, they repaired it off of that average monthly range. So right, see, that's the lower bottom range of that average monthly range. We broke below there, could not find any more sellers, and that means we don't have volatility expansion. We come back in the range again, and we stop those guys out. And then we're going to come back to the range now. This is a potential Momo down reversal. We break above this past week's highs. We're coming out the other side, and we're going to take out that high. That's all-time highs again. So we do have a little bit of time frame conflict here now, so this is a bit difficult. Maybe we don't do it this week. I'd be surprised if we do it this week. I think that would be a lower probability event, maybe like of only 40% chance we break above and take out the quarterly open and monthly open and break the all-time highs this coming week. I could see that happening very clearly, possibly in the following week once we get a new month and we have the time frames realigned again. But for now, I think we got a bit of resistance here at that quarterly open right there. All right. So TSX potential for it to repair itself here now, but still, you got a bit of a resistance ahead of you. Now, let's talk about an index that's not looking so good, and that is emerging markets. You recall what I said last month and so. I said this is not good for EEM. When we saw this play out back in June, going into July, I'm like, that is unusual, right? So this is a gap reversal on the monthly chart for emerging markets, and it was telling us something's not right. Something's not quite right in China. So whatever's going on over there, and it's very hard to get visibility on what's going on over there, but we've seen we've seen the carnage in Chinese ADRs over the past few weeks, and some of them have been destroyed, right? So obviously the big story of the past couple of weeks has been DIDI, and how somehow they managed to IPO in the North American markets, only to potentially get delisted now, and perhaps going to zero in the short term. But that's not a good move. So right now, whatever's going over there, perhaps some people think it's excess liquidity going over there, and the Chinese government is trying to quell or squash some of the speculation. But whatever's the case, it has not been a fun time owning Chinese ADRs. So now down close to 5% here, and let's see if we can find anything productive about that. Well, right now we're sitting, or even optimistic. Right now we're sitting right on the top of that broadening formation. So right now it broke up below it, so nothing there to tell us it's going to be support yet. So maybe we take out May's lows, but let's go on a little bit further to see our time frame analysis. So here at this point, this is an interesting chart, because the weekly chart now we have a situation where we're at the bottom end of that lower Bollinger Band. All right, so if buyers step up here, that would be interesting. We also have a shooting star, which is unusual. So shooting stars are usually, people see shooting stars, they think that is a bearish, right? But here's the thing: you have a shooting star, not at the top, at the bottom now, right? So if you had a shooting star at a top, all right. So let me see if I can find a shooting star at tops here, and yeah, here's sort of a shooting star here, right there. You see a shooting star at the upper end after you've had a multi-period rally. That is more of a potential for a topping tail. Then see here we had a shooting star, and it took 2 more bars, but finally did pull back. That is the kind of like the exact opposite of in this case here, because now you have a shooting star happening at the lower end. We've actually had multiple weeks of selling now, and this is actually not bearish. So people think that these shooting stars think that's bearish. That is actually not bearish. Now, I think it's just more neutral than anything else. If we break above this past week's highs, that's actually very bullish. Now, if we trade lower, that's actually not a bad thing either. If we trade lower and pop back into the range again, this past week's range, then that's actually not that. That's actually quite bullish as well. So that's what I'm looking for. Is maybe we see some more selling, a bigger flush on the coming week of these Chinese ADRs, and all of a sudden buyers step up because things have been kind of overstretched at this point. That's what I'd be looking for. So maybe we see a shooting star, and then something that opens lower and then pushes back into the range again. That would be quite productive. And then you'd have to really look at the possibility that maybe we've seen some short-term bottom in these Chinese ADRs. But you do have to watch out for that red line. That red line is the 3-month low, right? So that's the quarterly low. Actually, it's even closer than that, right there. Okay, so that's the line you got to watch out for, because if you break below that line there, the red one, that's an inside bar. And look, shooting star on the 3-month chart, inside bar here, we break below there. Watch out, that's an inside bar down move, and then we're going to see some more, potentially some more selling, because there's some range come back through here. So that's something that would be a really, really negative scenario. So you do need to watch for that very, very carefully, the 51.74 area. And so back to that weekly chart, I was saying how it wasn't that bearish, but I did say though that you don't want to take out that red line, right? So maybe it breaks down, but you hold above that red line, and you come back up again, or maybe you just it comes back up and takes out this week's highs. That would be very, very productive and potentially a bottoming process here for the those Chinese ADRs. But if you break below that red line, watch out. That's something you definitely need to watch out for. Okay, emerging markets. So here's the interesting thing. So I've given out the I've spoke about emerging markets, how it's been kind of a disaster. And of course, one good ETF to track is KWEB, which is the China ETF, Internet ETF by Crane Shares. This thing has a bunch of the Chinese names in it, like Tencent, Baidu, Baba, Billy. All the ones have basically been destroyed. And so looking at this one here, you can clearly see now that we had a inside month and down on the monthly chart. So we're down to the tune of 20%. So that's basically a correction on the actually trading in a bear market at that point. So that is definitely trading in bear market territory for KWEB. Quarterly chart, not saying much, but here is the one I want you to pay attention to. Here we go. Now what we have with KWEB is we have the inside bar and down going right into the lower Bollinger Bands. Okay, so this is what you need to watch out for now. Is can it do some sort of inside bar reversal type of move, where can it somehow pop up and take out this past week's highs? If it can, this will be the bottom, right? This will be the local bottom, and maybe we see a spring higher here. So that's what they'd be looking for. That's what it would look like to see a bottom this coming week in KWEB. So if KWEB does in fact break above this week's highs, yes, that's potentially a buying process. It has a lot of work to do because it was down 10+% for the week, so it'd have to come all the way back through the range here again. Can it do that with 1 week left of the month? Let's see what happens, right? So that's what I'd be looking for. Now, clearly, people have been running away from KWEB names, right? So those Chinese ADRs have not been a good place to hang out. You can see, they could see that big shooting star on the monthly chart, right? Comes back in the range there, and it's basically just been downhill ever since. Where has that money gone, right? So I think that's why we're seeing the rally in the in these high growth names. So whoever coined the term F-MAGA, they nailed it. So if you've been trading F-MAGA names, so F being Facebook, Microsoft, Amazon, Google, Apple, they have been crushing it, right? So those names, the F-MAGA names, have been ripping. So pretty much look at all of them. Facebook, all-time highs on Friday, I believe. Let's go look at the weekly chart. Yeah, so Facebook, all-time highs. Microsoft, right? F-MAGA, all-time highs on Friday. Amazon, not quite all-time highs, but getting close. And then, of course, Google, all-time highs as well. And Apple, a little bit behind, but not far behind. So, you know, again, all just running. And that's why it's been really, really hard to short the overall indices, because, you know, these names have been on fire. And I think it's a combination of like we've been talking about, the long duration trade, people move, you know, seeing that the yields are dropping back down again. And the combination of that, as well as just having to get the heck out of those MAGA, out of those Chinese ADR names. So at this point, though, as I've been pointing out to you, this is a bit of a yellow flag trade, right? Because now you're going into highs, going into Bollinger Band highs. So I would not be surprised. Look at this, right? They all have earnings this week. So Facebook, right? You're going right into highs. What do you think is going to happen here? If they have exceptional news, it has to keep going. Otherwise, you know what's going to happen? It's going to come back in here again, potentially back out, or at least back inside here, and stop out those late chasers. Facebook, Microsoft, right? We have earnings for Microsoft as well on Tuesday in the Bollinger Band highs. Amazon, I don't think Amazon reports until Thursday. Yeah, Thursday. Again, you're getting close there. Google, and I think Google's earnings are when? It says here 26th, so take that for what it's worth. Going into Bollinger Band highs, as well as Apple reporting on Tuesday as well. So into Bollinger Band highs, all yellow flags there. That's why I think that the rally is going to be a little bit tough for the Qs, because you might see a pop up, but would not be surprised to see a fade. And that would be the trade that you need to get ready for. Do not be surprised if that happens, so don't get caught flat-footed if people decide to fade that move, even on good news. The news is going to have to be basically priced to perfection, because you're going right into highs. So here's let's move out of asset classes now, change asset classes, and talk about TLT for a second. So TLT, long bond. So what do we see in the long bond? Well, the long bond actually is pulling back a bit. You don't see it yet on the hard time frame charts. Here's what you need to look for. And I don't think it's a major pullback. I just think you have to watch out here. But right now, TLT has had a pretty good run for the current quarter, right? So inside bar up on the quarter. Remember last quarter, I was like, yeah, TLT is probably going to stick as an inside quarter, and sure enough, it did stay inside quarter, because we just said that given the range here, the high probability thing was that it was going to stay inside quarter, and it's going to break out this coming quarter. We saw that breakout already, right? It's been a multi-week move so far. Okay, so pretty good month so far, 2.87% for TLT, and the move has been like this, right? So we broke out in the quarter, pops up, gaps up, we get a hammer here, it pops up. Now here is this, however, is a red flag. We're going into Bollinger Band highs, and we had a gap up that has now been faded. So that there is definitely a red flag. And typically TLT has been an upward move in TLT has been supportive of long duration trades like F-MAGA names. So now we're seeing is TLT is finally getting some weakness, because it's going into highs. And so what have we see here? Well, on Tuesday they really took profits. So that is what you call a gap reversal / red dog reversal. Here you gap up, you come back in the prior day's range, out the other side. That's your traditional, gap reversal or red dog reversal. Look at, they really smash it, right? So at this point here now, you have to really watch out for TLT getting weaker. I think it's going to be tough for sellers, for buyers, excuse me, to come up and break above this past week's highs. If they do that, then that's exceptional, right? If they can somehow do that, I think that's very, very indicative of just how strong the buyers are. But I would not be surprised to simply see an inside bar as well. So that's a fairly large, wide range. But that would be the situation I'm looking at here, is that if somehow the buyers can step up and break above there, wow, I'll be really that would be that would be very impressive. And you'd really want to add that to the a list of compelling reasons why you want to remain long of high growth names. But if you stay below here, you break below this past week's lows, yeah, I think you're going to see a bit of weakness, or at least some profit taking some of those high growth names, F-MAGA names. All right, so there's your TLT. I think you see near-term weakness now in bonds if you continue to pull back. Let's go years 10-year just to see a different look at that, because guess what? If we see the long bond pulling back, you're going to see yields popping up on the 10-year. and that's what we're finally seeing here now. So on the 3-month chart, just like the TLT chart, we had said last quarter we're going to stay inside quarter. We want to see which way it breaks, and it broke to the downside. Inside bar down on the quarter, right? And we've had now 1, 2, 3 lower lows and lower highs on the monthly chart. So that's an interesting, but here's the interesting chart. So remember, we saw the gap reversal on TLT. Guess what? We also see the gap reversal here now. Big hammer on the US 10-year. So this is what I want to watch for, because the sellers got everything they could want, pushing it down here. The buyer stepped up though. And now that's interesting because it popped it back on that range. Inside bar down, you break above there. Inside bar reversal possibly. Yields maybe coming back up here. Maybe you've gone a little too far, too fast. Again, we had 3 now months of lower highs, lower lows. So we see if we see yields pop up, right? What's going to happen there? Maybe that means gold pulls back a bit, and once again, maybe not so strong for the high growth names. So watching that very, very carefully to see. Again, we have those 2 data points, right, for bonds, the TLT and the US 10-year. Basically, you know, trading. Those obviously they trade inversely, but they should give us some pretty interesting levels to watch here to see how it plays out. Because you break above that high, yeah, we're going to see that US 10-year pop up a bit. Now let's talk DXY, because this one here is also interesting as a potential one to really, really watch. So here on the monthly chart, we have a big green bar right now, right? So US 10-year, we caught that bottoming trade on the US 10-year. Sorry, this is DXY. I'm saying 10-year. Excuse me, the US dollar. DXY or Dixie, up 0.59% for the month. But here's what you really want to watch is this level right there. Okay, so right now we have a lot of quarter left. We still have like 68 days in the quarter, but look how close we're getting to actually doing an inside bar up move on the US 10. Sorry, I keep saying US 10 here, but the Dixie, DXY. DXY is mostly comprised of being short euro. So essentially, if you break above here, yeah, euro's going down. Look, we're getting very, very close. The 93. 336 area is what it would take to break above the quarterly highs, and that would be significant. Okay, so definitely keep your eye on that level. I'm watching Dixie to do that. On the weekly chart for Dixie, it already went inside bar up. All right, so inside bar up on Dixie. Look, that level's right here, 9336. Okay, 9336. Okay, so it's getting very, very close. We move a little higher now, and that's going to trigger that quarterly chart. And so, that is something I'm definitely watching for, because a strengthened US dollar typically is not good for equities. So watch for that data point. MGC, that's basically the opposite, right? So if we see dollar get stronger, yields get stronger as well, then what could happen there? So here, outside inside right now in the month, maybe we close off the month as an inside bar. All right, so we only have 5 trading days left for gold. Well, not unless you count the when it opens. So let's say 6 trading days left for the gold futures contract, 5 for the GLD. But look, if we stay here, which we very well could, outside inside, then going into August, which way does it break? Outside inside. How do you break that? That'll be significant to watch. Now, late August, I think it's the 22nd or that week of the 20-something of August, there is the Jackson Hole conference that happens every year for the Fed, and maybe some big news comes out of that rocks gold. So that's something that may be lining up here. It's something to watch for the gold move. But for now, I'm thinking that we probably just stay inside this range, July's range, close it out as an inside bar. That sets up for something interesting in August. Again, we are in the middle of summer holidays, so after this week of volatility, this coming week, I think we could just fall, unless things really fall apart, we could just meaningfully just do a lot of nothing. So we'll not be surprised whatsoever that maybe we have a little bit of volatility here for a small stretch and for things to get quiet again. But that would not be a scenario that would be that unusual. So it goes Momo up. Maybe you get a breakdown here. It did a Momo up reversal, but you pop back into the prior week's range again. So right now, unless you can break back below the last week's lows, you're kind of stuck in no man's land here, because you still got the prior month's lows there. You still got the quarterly open here and monthly open. So I think it's been very hard with 1 week left to try to break below these, that's level here. So for now, I think that monthly inside bar condition is probably where it's gonna wrap up for MGC. Now that's gold. What about digital gold, Bitcoin, or digital, gold 2.0? Bitcoin actually has bounced back a bit, and here's a lot I've been watching. People are funny on the internet, on Twitter. I guess I'm one of them. But a lot of people have been, calling this as a bear market or whatever it may be. But the reality is that or they're calling these descending wedges and inverse head and shoulder or head and shoulder patterns. That stuff is so subjective. It's literally like drawing charts with crayons. What I'm trying to do with our analysis here is just be as objective as possible with the price action, right? So you never describe something that you cannot see for yourself. That's, I think, the benefit of this method, is that I'm trying to be very, very objective with the bars in front of us. That way we take the subjectivity out of charting. Charting is already hard enough without having to try to introduce these these types of patterns that you have to kind of angle your head a certain way, like maybe 45 degrees, to be able to see the pattern. I think that stuff is like I said, like charting with a box of crayons. Here's what you want to know, and this is the level that's been holding. I think I've been consistent with this. I've been saying it for a long time now, that I'm not calling a bear market in Bitcoin or Ethereum until you break the 3-month trend. That's what I've been calling now for a long period of time. And what does that mean, breaking the trend? You gotta take out the prior bar's low, right? So as painful as this has been, it's a 40% pullback on BTC last quarter, remarkable, and plus a little bit more this past month. But the low is literally, I've been calling it 29,247, right? Until you can break below that low, for me, it's not yet a bull market. We haven't seen a reversal of the higher time period, right? That's the time period that I'm waiting for to break before I say it's a bear market. So far, it hasn't broken. I'm not saying it cannot break, but I'm just saying it hasn't yet. So that period, that level is 29,247. That's last quarter's low, objectively, right? I'm not drawing any fancy patterns here. That is literally the low from the last quarter, and the markets have not broken below it yet. Look, we came within here. This past week was 29313. I thought it was actually going to break. It did not. The buyers stepped up, and they stepped up aggressively. And so far, even though we've had a steep pullback, there's still people stepping up and buying, and they're defending the quarterly trend. So these definitions of a bear trend or a bear market, a bull market, these are all subjective things that help people's mental models. But in the end, what can we say is that we know that on the 3-month trend, it's still up, even with this 40% pullback. So inside buy right now for the month of July for BTC. Same thing with the quarterly chart. It's an inside quarter. I don't think you're going to break outside, at least at the upside. I just don't see how you're going to break above 64,829 this quarter. The higher case scenario is that we stay inside bar. I think that's the highest case probability, and the lowest and the second probability is you break below last quarter's range, and you turn to a bear market, right? So I'm not calling for a bull market here. I'm just saying that until you break below that, the highest, the time frame, the 3-month time frame, still pointing up. Okay, and for now, look at this nice reversal we had on Bitcoin, and people are wondering, like, why did Bitcoin bounce? Because there are people defending. There's people defending right there. 29247. It came close. Look at the daily chart. Now this is actually a reversal here. This is actually a reversal. Hammer now. You break below, but you come back in the prior bar's range. So people were shorting that. You have these breakdown traders who put their, people like to draw their vertical or their horizontal levels, and they'll find a couple data points to fit that, something like that, right? So they'll say, okay, that looks like if we break below here, that low there, right? Look, I got one data point there, one data point there. That's plenty of data points, two. And you break below there, and guess what happened? They get stopped out, right? So they breaks below, and nearly, they're in the money for a little bit, pops back up. As soon as it comes in there, they're at risk now to get stopped out, because when are you going to put your stop above that? It's pretty wide, but that's what some people are probably doing. And so the market's coming off after them now. At this point, they're going after that level. So on the daily chart, we are getting a little extended here now, because you had a 4-day rally, and look, this move is completely contained inside the average weekly range. So let me look at the daily chart and make it very obvious. We tag nearly to the T the average weekly range low. I can't make that stuff up, right? That's literally being objective. I'm not making it up. We tag the low of that average weekly range. This is drawn automatically for me, and we tag the upper end of that average weekly range. So this is a consistent move for BTC. This is nothing unusual. And if you're any good trader, then you'll understand the significance of that. Is that we're basically in a range-bound market, and we're in in a move that is consistent with it. We tag the lower Bollinger Band. So look at this move. It's a Momo down, and the guys who are selling this move to the downside, They're chasing to the downside. Momo down. You get immediately punched in the face when you break above there. All right, break above there, they're going after your stops, and we've had 4 days in a row now. Now, if we break above there, we know that's the last week's high, so those guys will get stopped out for sure. Now, at this point, we are getting close to that Bollinger Band high. That will not be surprised to see this can pop up a little bit more, and then for sellers to step in once again to keep it within this range. Because even though we saw some buyers step up here, we are still inside month, inside quarter. So I'm not expecting this thing to go gangbusters yet, especially since a lot of people track this 200-day moving average. It's still trading below 200-day, so Bitcoin is still not, by any means in a raging runaway market, right? You're still range bound with a slight, with a slight bias. Even though right now we have a green week, we still have a red month and a red quarter. Now Ethereum, same thing. I took a trade on Ethereum. I'm actually, for Bitcoin, I'm actually dollar cost averaging in, because I think ultimately this resolves higher as an investment. I think Bitcoin is a fantastic investment as well as Ethereum, and so I've been dollar cost averaging into both. But I actually did trade Ethereum this past week. So Ethereum, what do we know about Ethereum? Here we go. Let's look at our 3-month chart inside quarter. Right, I think more than likely we stay inside quarter. Inside month, right? Momo down, inside month now, right? And next month, this will be interesting, right? So if we stay like this coming month, anywhere like that, like an inside month, then next month, imagine going in August, if we can break above August's highs, or July's highs, that's a potential move to the upside there. That's the potential in Ethereum. Not there yet. Still inside month, 1 week left. And weekly chart, outside bar. So these folks got stopped out. So here, redraw our ranges. I'm going to delete this line here. Look, that line, 171140, that is the line in the sand that I have here for the Ethereum uptrend. Why? Because that's the low of the prior quarter. They haven't taken it out yet, right? So I'm not saying they can't. I'm just saying they haven't. So being objective here, right? That's the line in the sand that you need to watch for. Right, because I think if people who are actually understanding of price levels, that is significant, right? Other folks, they just draw lines in the sand, but that will be a significant level, and that's what I'm watching for, to break or to hold. And for now, we saw the buyers step up and they defended it. And I really thought we were going to break it this past week, because the low there, like I said, 171140. We got as low as 1721. It was so close, and it looked like it was going to take it out. But when it didn't, guess what? I had to buy. I had to be a buyer. All right, so here. A daily chart, you're coming down, right? Shooting star, selling, and all of a sudden, it looks like it was going to take it out, but the buyers step up, right? They step up off the low, the Bollinger Band low. Okay, the Bollinger Band low is right there. Step it up, they take it back in the prior day's range, and that's immediately a buy for me. That is a type of reversal, and I buy that, and now sitting pretty, up plus 4R on that. Took some off around 2R already, because I think we're still in a range here for Ethereum, like I said already, inside month, inside quarter. So took some off already, but willing to hold on to the rest and see where it goes, and keep my stop at a break even here. So no matter what, making money in that trade, I wouldn't mind even adding to that at lower prices. I'm not going to chase here, but I wouldn't mind a pullback so I can continue to accumulate more Ethereum. So it is a red month, red quarter. You do have a green week though, so a bit of mixed time from alignment, which is what makes me not too bullish. But did reclaim the 200-day moving average. That is significant. So that 200-day on Ethereum has now been reclaimed, and now you got to watch and see. I wouldn't be surprised to see sellers step up here, right? Because you've had a 4-day rally here now, and we're not out of the woods yet. Like I said, it's still mixed time from alignment. But at this point here, the buyers have clearly shown that they've stepped up, and unless you break below that low, 1721, this past week's low, that may be the low for the month. Okay, so there's Ethereum. Let's do 2 more charts, actually 3 more charts, and we'll wrap things up. Let's go shit perp. That's the perpetual index, futures index for shitcoins. What do you know about that chart? Well, it's basically probably the worst out of the bunch. Here on the monthly chart, we've had 3 red months in a row now. We did pop below. It came back into last month's range, and so we kind of did some sort of a. I think this is actually a bottoming pattern here. Although you're coming off the average monthly range low, pops back up. Now even Momo down. If you break above this past week's highs, that's a Momo down reversal, and expect to see more buyers step up here to try to catch that bottom. On the daily chart, yep, same thing here. You're getting close to tagging that average weekly range high. But I wouldn't be surprised to see a bit of selling come up here. But maybe we see sellers break up. If we break above that level right there, right? Again, we still have 1 day of trading left for cryptos. But if you can break above that into the coming week or this week's highs, then maybe we see higher prices. One index I want to introduce you to, which I think is a good one to watch, is the DeFi Perp Index. So basically, it tracks a number of DeFi protocols, not all of them, but a number of the major projects, and it's a perpetual futures contract. So DeFi Perp is a good one to watch if you want to kind of track the DeFi space and how strong it's performing. And right now, outside bar and down, inside bar. So inside bar for the month. And here we also have a hammer coming off of the average monthly range low and off that 50 period moving average on the weekly chart. So that's interesting there. We have a hammer developing now. So this coming week, I'm watching that carefully, I'm going to change the color on that. Can we break above this past week's highs? That will be what I'm watching for the DeFi Perp Index, is if we can break above there, maybe we see more buyers. Otherwise, if you break below that low, that would be significant as well. But that's a pretty clear bar. Now we've got a hammer sitting up right there, and I think we need to watch that one very carefully. Now, a few final charts here, and we're especially the crypto space. I've been spending a lot more time trading those markets because they're exceptionally fun to trade. But if you look at all the charts, the money being made for the past few weeks has been in the NFT gaming space in cryptos. So as you've seen in my last few videos, I've been just trading the heck out of Axis, the Axie Infinity token. So here, Axis Infinity, and this thing has been on a roll. And I shared that trade I did last a few weeks ago, and that one was probably was a great trade. Look what Axie Infinity's been doing this past month, up 600%. Inside bar up on the month. Phenomenal trade, phenomenal moves in Axie Infinity. And I think I've been in there right from the get-go, right? Like you saw my videos, I got in on that inside bar reversal low, right here, $4.21, and it got up to like $50 darn near, right? So $49.78. Now, I took some profits, as you know in my videos. I took some profits when it took out that low there. This bar's low, shooting star, took out that low, so I missed a bit of this move here, which is fine because I know that's I caught the meat of that move from down here, from 4.212 up to here, 15. So that's a nice chunk of change, and I watched it come back up. And that's, for me, it's not, I don't want to chase this stuff. I don't want to chase it when it goes on the high. So you just missed that move. It pulls back in and bought right here on Monday, right? That reversal I talked about off the 20 period, it's a trending name. This thing's trending, so you look at the moving averages because it's trending. Everyone's looking at that stuff. I buy as soon as it comes back in that range, and that thing moved exceptionally, nearly up 20R on that trade. Took some off now. Took some off into that all-time high move here, got back in again on a lower time frame, chased it back up here again. But yeah, Axie Infinity, amazing trade. And there's a lot of names, you just need to know where to look for. The NFT gaming space has been on fire, so Axie Infinity has been doing great. Names like, let's say, Alice USDT. So Alice, another gaming protocol. Look at that one. Has had a really great week, right? So nice 80% move here for Alice. Mana, another gaming token. So that's basically Decentraland, right? Another nice move there. And Sand, which is another token for for crypto voxels. Also, all these DeFi tokens, or all these tokens for these gaming NFT projects have been on fire. This is trading full time from alignment to the upside, right? Green month, green quarter, green weeks, up, was up over 60% at some point this past week. So just need to know where to look. So even though I think in a protracted kind of consolidation period for cryptos, there are obviously some sectors of the crypto space which are outperforming, and that's what I think is super interesting now, is that it's taken time, but we're actually finally seeing in the crypto space a world where everything doesn't have to necessarily trade in correlation. It certainly helps when Bitcoin and Ethereum are trading in the same direction, but we can see now that there's significant enough project or product differentiation that we are now seeing the emergence of sectors in the crypto space, and that they actually can trade on their own fundamentals. And I think that's a phenomenal development, and just talks to the maturing process of the crypto space, and makes me very excited to be participating in that. Anyways, that being said, I want to wrap things up. This week's video went long because I've been gone for a couple weeks, or I haven't dropped a video for a couple weeks, so hope you enjoy the longer format. As always, if I can improve the videos in any way, if anything, is there anything I can help you out with, let me know on the YouTube comment section or on the blog, thetradinginch.org. And if you like the videos, give it a big thumbs up, smash that like button, click subscribe, do all that good stuff to make sure that you're supporting this channel, and that keep these videos going. All right, have a great trading week. Hope you enjoy the volatility that'll probably come out this week, and that you stay on the right side of the trend. All the best. Talk to you again soon. Happy trading.